Hello, dear friends. Welcome to a new edition of our weekly webinar from Proficient. I am Shumoy. Today it is 28th of December. We are hosting our last webinar for this year. It is Friday today, and market just closed 1.5 hours ago. And what an eventful week we had, right? Nifty showed remarkable volatility. And Nifty was mainly driven by global cues, and all we know that US market actually was showing uh, strong volatility. It was basically weak, and December has been very bad for US markets, and actually American markets are right now trading below both the important moving averages of 200-day, 50-day, 100-day denominations. And more importantly, there are major pattern breakdowns to the downside. And another important factor is that the yield curve has been reversed. That means the longer term interest rates and short term interest rates, the spread between these two interest rates have been reduced, which is bearish because interest rates actually uh, are the driving force behind the market moves. And so if the spread between the long term and short term interest rate decreases, so that poses a hurdle for the banks to make profits, and that is seen in the overall markets. So we are staring at weakness in US markets. Now, having said that, there occurred some especially strong pullbacks this week, especially on Wednesday, and which also continued on Friday as well. And Wednesday's pullback in US equities was of the magnitude nearly 5%. So 5% rise in one day. That was remarkable. But does it change the overall perspective? Probably not. Let us check out the daily diagram of daily chart of S&P 500, which is the large cap index. And this is whatever you can see on my screen is the daily chart of S&P 500. And as you can see here, that the past last 2 days was white candles, and before that, US market actually topped out on the first week of October itself at around 2,925 odd level, and from there it has shown remarkable sell-off. Past 2 days of rise, does they mean anything? It is still early to predict that, but weight of evidence says no. Past 2 days of action should be viewed as a dead cat bounce, as a pullback rally, nothing else. And there are a host of resistance out there, trapped bulls at higher levels, and once prices manage to go to these levels, suppose 2550 or 2600 odd levels, these trapped bulls will try to take exit, and that will add to further supply to the market. So our intermediate and intermediate term opinion of the US equities is weakness going forward, and in light to that, we will now judge whatever is likely to happen in our Indian equities. Before that, let me show you the commodities charts, mainly the dollar index and the crude oil and gold. So So this is the chart of dollar index, and right now it is trading at around 96 level, having topped out at around 97.50 in mid-November. So there is some weakness in dollar index, and this weakness is actually being transformed to commodity pack, mainly uh, precious metals, energy packs, because all these are actually denominated in dollar terms. So let us first open the chart of gold. So this is the daily chart of gold, and it requires some special mention here because as you can see here, 200-day DMA, 200-day moving average, which is right now is at 1256 dollar an ounce level, has been breached upward, and that occurred after quite some time. That occurred nearly after 5 months. So we are expecting short-term bullishness in gold, and this bullishness can take it to the regions of around 1370 odd levels. So there is some 7 to 8% of rise possible in gold even from this level, provided it does not violate the support at 1240 region. So short-term view in gold is very bullish. Now let's see what is happening in energy pack. This is the daily chart of WTIC, which is the crude oil, and yeah, just like the US equities, it is also showing weakness, and right now it is trading at around $45 a barrel region. So yeah, going forward, the overall trend is down, there is no doubt about that, but it is also oversold at this level, and we can see certain uh, bullish divergences out there, and this bullish divergence will be confirmed once prices go past 47.8 $47.5 dollar a barrel mark. If that happens, then we can expect the price of crude oil till $50 region. So that is one possibility. On the other hand, 42.5 was the last week's low, on this week's low as well. So we will initiate another short position if this low is taken out, and for any long position as of now, this 42.5 dollar a barrel region will be kept as a stop loss. So that's our opinion in the commodity packs. Now let us come to our equity markets, domestic equity markets, and this is the hourly chart of Nifty. Let us turn to the daily chart. Yeah, so this is the daily chart of Nifty, and there is absolutely, we should say, random movement in short term, because if I turn it into a weekly time frame, here we go. So you can see there is a myriad of rising falling kind of patterns. You can see this green and red on weekly time frame for past 8 weeks, almost 7 weeks. So in the in short term, there is no clear trend as visible as yet, but yes, we are trading close to the 200-day moving average, and in the short term, some higher bottom formations are visible. This slightly raises the odd of rise going forward. And yeah, there is this view of cautiously bullishness will be valid as long as Nifty does not go below the 10,500 mark. So unless Nifty breaches 10,500 mark, we will be more intended to maintain our bullish view, and that is in spite of what is happening in the United States or across many global markets. Why this is happening, we do not know. At least we do not know as yet. But as long as we can see our domestic markets outperforming other global large cap indices, we should trade it from the long side. So in the short term, our opinion is as long as Nifty stays above 10,500, we will have to keep our long position. Now let us come to certain stocks. Those are likely to outperform in short term. Mainly the private banking stocks. We have narrowed our search to, and also some FMCG sectors. And we have been talking about these two sectors for quite long now. And these sectors are continuing to do well. Say, for example, ICICI Bank. Here it is, the ICICI Bank. It is right now one of the leaders in terms of outperformance, and also in terms of slightly intermediate to long-term momentum among the Nifty stocks. So ICICI Bank remains in our list, and so is also HDFC Bank. Among the large cap FMCG or consumer discretionary, you viewers should be aware that we have been talking many times about Hindustan Unilever, and the stock has been doing pretty well for an extended period of time. Today it showed a little bit of weakness after going till 1834. It did not sustain there and closed at 1820 odd levels. But nevertheless, as long as the 1750 odd level survives, that was this week's low, and it occurred on a bad news about Competition Commission fining this company for violation of some norms. But even then, the stock did not lose ground further after opening, and it actually closed with a green, right? So Hindustan Unilever is maintaining its strength. There is no doubt about it. We will try to trade it from the long side, and so is Dabur. That is another FMCG stock we are preferring at this point. This is the daily chart of Dabur. It has made a top at around 458 2 weeks ago, then made a correction till 414 odd level, and right now it is looking like an end of the correction, and it has closed at around 433. So at this point, it is a buying candidate with an overall stop loss of 410, and immediate target will be at 460 odd levels. And once the previous stock is taken out, the primary uptrend is likely to continue further. So these were the stocks that we are likely to trade from the long side going forward. Another is Bajaj Finserv. It is from NBFC sector, but the stock is doing pretty well, and The lifetime high was at around this level. In midweek, in second week of August, it made its lifetime high at 7,200 level. Right now, it has closed at 6,500 level. So you can keep a stop loss at around 6,200 level and trade this stock from the long side as well. So this is also another candidate that is likely to outperform Nifty. Now let us concentrate on some likely underperformers. Going forward, we believe Tata Motors will continue to come downward because the stock is in a primary downtrend and it has taken resistance at its 200-day moving average at around 177 odd level. And after a pullback, after a brief dead cat bounce from 160 to 180 odd levels, it has taken the resistance and that now again retracing, or should I say resuming the primary downtrend. So this will be a good candidate to sell on strength, sell on rally, because the primary trend is down. So this is one stock that is likely to underperform going forward. Another is Yes Bank. Although this is a private sector bank, and in most private sector banks we are overweight, but there are some fundamental issues regarding management in Yes Bank, and that is being evident in its primary downtrend. And we would prefer to trade this stock from the short side, and a violation of this low of around 175 will be good, right? So if 175 gets broken, we will sell Yes Bank with a stop loss at around 186 and for a target of around 160. Quite surprisingly, Reliance is also an underperforming stock. And as long as it stays below 1150 odd levels, we will look for selling opportunities in coming weeks below 1120. Today's close is at 1125. So if it violates 1120, we will like to sell it, keeping a stop loss at around roughly 1145. So these were the trading ideas for the next week. We are maintaining a cautiously bullish opinion in the overall markets. Most of the stocks are among the stocks we mostly prefer the FMCG, the private banking, and NBFC stocks a bit. And let's see what happens. And as usual, you have to take carefully, use stop losses, do your risk management properly, and wish you a happy new year. So meeting again in new year, and stay blessed. Okay, fine. Goodbye.